China unleashed a stimulus that some are calling a bazooka stimulus, right? There were things there to help bolster the stock market. They took measures to help bolster their housing market. And they pretty much made money cheaper across the board with a bunch of rate cuts. Then they basically signaled that there's going to be more to come. Some call that a panic move. Well, whatever you call it, it's going to affect the U.S. economy for sure. My next guest will surely have something to say about this. Please welcome to the show, Dave Nelson. David, thanks for being on. All right. It was a pretty big move overnight. We had some things that did move off of it in the agricultural world, as well as commodities and oil and such. But there could be some longer-term effects. What are your thoughts?
There's been some front running here. You know, there's been a lot of speculation for the last couple of months. But having said that this will likely be more important for the United States and the rest of the world than it will be for China itself. These stimulus measures, they're large, but they're large for a reason because, you know, their economy is struggling. And what's interesting here is Xi Jinping, you know, it's whispered in China, very, very little. Everybody's afraid to talk out loud. As a matter of fact, recently, another Chinese economist who was speaking against Xi Jinping has mysteriously disappeared. But look at what they're doing here. Interest rate cuts, lower mortgage rates, easing of capital requirements for banks, and all with the promise more is coming. They're even setting up swap facilities, which is kind of like setting up a fund for insurance companies to buy stocks. So it's a big deal. It is going to affect things, and they're an important part of the economic engine for growth in the world. So, you know, I suppose they need this, and frankly, the world needs it as well.
Yeah, and this is the thing I don't like about how aggressive they've been. I mean, they're aggressive because they need to be, I suppose, right? But you've got Europe is teetering, and now we've just come out and started to cut rates by 0.5 percentage point when maybe we thought it was just going to be 1/4. I mean, I'm not getting a ton of strength signals if you get my drift here. And to your point about not being able to talk in China, I was, you know, I'm as smart as I am. I was over there in December of 2019. I was over there for their COVID, right? And but I was taken around by two young Chinese guys, and every time I asked them about their housing market, they looked over both shoulders and whispered at me. That's how afraid that's how afraid they are to talk openly about it. I mean, both of them, nobody would say anything, but. You're right. So it's a pretty closed system. But with all of these big economies, Europe, U.S., and China, all not showing me any real big strength, I kind of wonder what could be coming around the corner now. I don't want to be Chicken Little about it, but you see where I'm going with it.
Yeah, there's a downside to this as well. Obviously, it means pouring on a lot of debt. But, you know, we live in a glass house here. We're doing the same thing. So we're throwing stones over at those guys. I think we're obviously in a lot better shape here. I want to give a warning to the viewers here because a lot of investors are going to start to look to companies like Alibaba and Baidu. I'm sure they're up today on the heels of this. First of all, when you own these companies, you own nothing. All right. These are not stocks. I'll repeat that. They are not stocks. They're variable interest entities, or VIEs, and they're domiciled in places like the Cayman Islands. And effectively, you don't have the same protection that a stockholder does. So a lot of people will go there. I say that's an avoid.